Okay, testing, 1, 2, 3, testing, 1, 2, 3. Dwayne in Spain falls mainly on the plains. Zians in France stay mainly in your pants. You guys ready to go? Yeah, who's alive? Trying to see how long the lag is. Well, at least you can broadcast this in 4K, but there adds a bit of a lag. But whatever. Welcome to Forex.Today. It is the 18th of March. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I'm a currency trader just like you. I've been sitting here for about 20 years trading Forex. One day I was reading a magazine, and it said that Forex was $2 trillion a day. So I quit my job as a venture capitalist almost immediately. Yeah, not quite. I traded on a demo account for a very long time. Then I'm like, I'm done with this stupid venture capital stuff. I mean, we're only going after $100 million markets when Forex is $2 trillion a day. So, boom. So anyways, I've been here ever since. Strange fact, I worked on a board of directors with George Soros, and George Soros is probably the most famous Forex trader of all time. And one day he put his arm around me and he said, well, son, let me tell you, one word, Forex. Well, not quite true. I did sit on a board of directors with him, but boy, can you imagine? Because I think I was only 20 or 21. Wouldn't it be amazing if I just went into Forex back then? Amazing. But anyways, thank you, Mr. Soros. So, great. So, ask questions, get involved. Yesterday, the Fed meeting went just like I had outlined. I didn't expect any surprises, and there were none. I said most people in the market were misunderstanding the situation because they didn't understand the math, and the Fed would understand the math, and cool. So, great. So, here we go. Very nice. So you can ask questions about technical analysis, fundamental analysis, statistical analysis, trader psychology analysis, all that kind of stuff. What else? Treat each other with kindness. Thank you for sharing your positive energy with me every morning. Thank you for your loyalty and respect. Thank you to Traders Way as a broker. It's very difficult to find someone that has, that can earn your respect, can earn your loyalty, can earn your business. And Traders Way has earned my respect over the years and years and years that I've been working with them. They're good people. So if you need a broker, why don't you give them an opportunity to earn your loyalty and respect? It's a pretty simple process. You go to tradersway.com, you fill out a simple form, and you now have a demo account. You could be in the back office in just 20 seconds. And there you can kind of look around. You can download MT4, download MT5, download CTrader, whatnot. I like MT4. Many people have moved over to MT5. It's more modern. I'm just a fat old white man, so I still use MT4. All my custom indicators and are available on metatraders.com. The link is in the description below. A link to Traders Way is in the description below. Cool. So give Traders Way an opportunity to earn your loyalty and respect. If they do, when you're ready to trade real money, you'll already have an execution partner that you want to work with. Thank you, Traders Way to Go. So what is the follow-up plan on your Ananda? Dude, Ananda, we've been talking about that for months. You don't know what the follow-up plan is? Are you in the swing trading group, Ananda? Maybe not. Maybe that's the issue. HK says, is there a significant difference between MT4 and MT5? As a trader, no. But the way it's programmed, yes. But anyways, yeah, let's put it this way. The next major date is the third week of June. And the Friday of that week, which is the June Fed meeting, on the Friday of that, so the Fed meeting's on Wednesday, so you get the volatility. Then you get the follow-up trading on Thursday, and then I'm going to do my Friday webinar, and then the family, we're jumping in the Porsche, and we're driving down to Florida. We're going to hang out on the beach, we're going to party, and like I said, you're like, how much is that? How much is that? Give me some more of that. Give me some more. And it's going to be great because that's vacation time. It was last year. It is this year. Different place in Florida, though. Different coast. But the idea is that the plan that we outlined back in really July of last year, and then reiterated again in December, reiterated again in January, February, March. March is a pivotal point in seasonality, and we're going to carry that out into June. So there should be a plan. Okay. If you have not gone through and mastered the swing trading group, you're not qualified to even try to join the portfolio management group. Saying one of the first things you have to do is do a trading test. And if you cannot make 10,000 pips in a month, you fail the test. You lose your $200 because that's what it costs to even try to join. And you're just not ready. You go back to the swing trading group. So many people show up, they're like, hey man, I'm trying to make 300 pips a month. And they're like, piss off, we're not interested in you. Because you don't know how to trade. So that's not a place to learn that kind of stuff. You need to know the basics of trading first. All right, so let's move on. Okay. Do we need to go in the? Yeah, okay, let's do this. Let's think about this. Instead of going through the normal process, I guess we should probably talk about the Fed stuff. But dude, we've been talking about it for weeks. I didn't even do a special event yesterday because you should already know what everything is and is about and what the plans were. I felt no need to do anything. So what would I do? Fed Watch. So I didn't even think it was necessary to do a special event because we already had everything planned. We already did everything. Like there wasn't anything to do except for the Fed to come out and people to freak out, and we go about our business. But we have some questions like Robin was asking. Robin was asking like, hey, it was so unclear what, where did it go? Oh, it was so unclear what when the Fed was going to raise interest rates. Well, they actually said it about 7 times, Robin. They said 2023. Okay. But let's take a look at a tool you can use so that you don't need someone's opinion, and you certainly don't need to ask me. This is something called the Fed Watch tool, and this has to do with Fed funds futures. Okay? Fed fund futures. So I want you to think about JP Morgan, the bank, negotiating with Bank of America, the bank, about lending them money for a small period of time. So it's only bank to bank, institution to institution. And it's because, I guess I should try drawing some of this stuff. It's because, like, you got a bank, and throughout the day, money comes in as deposits, okay, to your teller. And then money leaves because of withdrawals, okay? And this goes in and out, day after day after day. And you can plan for this, and it takes some risk management to make sure you have enough liquidity to meet your daily needs. But most of the money gets saved. It's very rare someone, puts in a whole bunch of money and then very shortly takes all the money out. That would actually be a red flag for money laundering. So most people put money in for the long run, and every once in a while withdraw cash. And the withdraw cash, you could plan it out, what is normal, and maybe you always have 20% more than normal just in case, right? Cash on hand kind of stuff. Okay. But there's also a requirement to have a certain amount of money that's in the vault at the Fed. Now, it's still the bank's money. In this case, it's not the bank's money; it's the customer's money. But and it's in the custody of the bank, so we can call that Bank of America. Then it has to take a certain percentage and put it at the Fed, the closest Fed. So Bank of America would put it at the Fed, the San Francisco Fed. Okay, cool. But there's ebb and flow happens. Like this is your balance, right? And so money comes in and out, in and out, in and out, and the requirements are, oh, you need to add a little, oh, you have excess, oh, you need to add a little, you need to add a little, oh, you have excess. You always have this up and down ebb and flow of demand for cash sitting at the Fed. And so very often, right, to keep everything in balance, Bank of America would have to go into the interbanking system and talk to other banks and say, hey, just loan us money overnight. Because we got a lot of money loaned out into mortgages, lent to small businesses. There's lots of car loans and student loans, and they're all performing, and we're earning interest. They're profitable loans, and they'll all be paid back in time. But today we're $10 million short. And for Bank of America, that's nothing, right? But they're like, we actually are required to deposit the $10 million here tonight by the close end of business today. And we're just a little short on liquidity, so lend us the $10 million for 3 days or 3 months or whatever, okay? So it's banks lending banks. Now, understand that banks are very informed. There's no asymmetric information challenge. They're both very, very well informed, and the biggest risk isn't that Bank of America doesn't pay JP Morgan back, it's that interest rates will change. So they'll say, okay, we'll lend you money for X days, and you will pay us, 0.2%, but then interest rates go up a little bit. And now, even though JP Morgan gets paid back by Bank of America, they've actually lost a little money or lost an opportunity cost or whatever, because over time, interest rates went up, okay? And not necessarily just the Fed funds interest rate, but we're looking at the 10-year T-note at 1.75 and the 30-year now at 2.5 on its way to 3. So there are costs. Okay, there are costs. There are borrowing costs. There's borrowing costs are going up for corporations, for example. This is why you see some companies actually losing now in the stock market, even though the stock market's at all-time high. Some companies are being hurt by this because, hey, interest rates at the Fed haven't gone up, but issuing a bond into the bond market, well, that cost has gone up because now investors are demanding more money. They're like, hey, a year ago I was happy with 1%, but now you got to pay me 3%. And so in that case, if you look at it that way, if that were true, for them, interest rates went up hundreds of percent since last year. And they might need to do that because of corporate cash flow burdens, right? And now that cost has gone up exponentially and is expected to continue. So some companies are being hurt. Some that lend money out will will benefit. So right now we're getting a rotation in stock market. When it comes to this, where the question is, when will the Fed raise interest rates? And what we're saying here is this is bank versus bank negotiating billion-dollar contracts. Okay, this is smart money. And their number one concern now, right, is when the Fed will raise interest rates, because that's what the Fed funds rate is. You have to borrow money from another bank to make sure your Fed funds requirements are met. Okay? So they negotiate changes in interest rates, and then what that does is it changes the price of the asset because there's an inverse relationship. And if you look over time, Fed meeting, okay, Fed meeting, Fed meeting, Fed meeting, Fed meeting, you can look at the price of these contracts they're negotiating, reverse engineer it based on the price because it's just cash flow, right? So you do a discounted cash flow, and you come up with you can derive the interest rate that they negotiated. Okay? So, for example, we could look at this. There's a meeting in April. There's 97.8% chance, or priced in, based on, remember, it's not probability. Based on the contracts being negotiated by smart money, what they've negotiated with each other is there's a 97.8% chance that the Fed does not raise interest rates, and only a 2.2% chance. So 2.2% of all these contracts negotiated by bank versus bank have a price that's indicative of a higher interest rate. So let's just say there's only a 2% chance the Fed hikes in April. Okay? So now we can go to the June meeting, and the chance is still low, but it's gone from 2 to 4%, 4.5% in June. So 4.5% of these contracts have been negotiated based on interest rates going up, but only a small portion of them. Okay? Right? So now you can go out and out and out and out. Okay? September, no change. Nobody has negotiated interest rates going higher. So what you might see here is some market participants don't think June will be the raise, but other market participants think September will be the raise. Okay? You go all the way out in November and it jumps again. 6.4% that we raise interest rates for the first time somewhere between now and November. And some of the people back in April that thought interest rates will go up, they think it'll go up again. Not very many. 0.1%. Okay? Go out to December, and once again, no real change. So only 6% of the market thinks the Fed's going to raise interest rates this year. 0 say there will be an ease. 93.5% by December think there'll be no change in Fed policy, and only 6.5% of all market participants believe the Fed will raise interest rates this year. Okay. Peter, the Fed does monetary policy and open market operations. Okay, which influences the interest rate. All right, so, right, you can see here probably no interest rates this year. Okay, if you do some research, you might be able to find data farther out. But the issue here is the Fed has told us 2023. The Fed has told us about an overshoot, and I've explained multiple times now, and I think even yesterday, that the overshoot has to do with potential GDP and actual GDP. And remember, I've been preaching for the last 3 or 4 weeks as the market has been freaking out about inflation. I said nobody cares, everyone that's freaking out doesn't understand. So I don't know if that's a form of caring. But to an economist and to an investor, we don't care about year over year. Okay? We chain it to a particular year. We want to see real growth. We want to see real inflation. And so I think the market's freaking out, and it tells me that they just don't understand. And the Fed's like, dude, guys, you don't understand. It's basic math. So next year, the market won't be freaking out anymore because perceived high levels of growth and inflation, like I said, we're going to have 6 or 7% GDP coming up, and people are going to be amazed because they don't understand. So it'll be amazing to people that don't understand. The year after that, in 2022, we will get normal rates of growth, normal rates of inflation, and people will go, oh, well, then there's not a massive need to raise interest rates. And the Fed will say, okay, yeah, that's what we've been telling you. Rari says, Wayne, I just signed up for boot camp earlier this week, and I like the education. A-okay. Right on, man. Rari. Cool. Daniel says, can these probability change as we get close? Of course. They will change. You have to understand, this is negotiations. Negotiations always change. Okay, Pete. Pete, your bias on the USD is still a sell. Why would my bias change? The Fed meeting came out exactly as I described to you guys for weeks and weeks and weeks and weeks in advance. So why would it change? The meeting was one of the most boring meetings ever. It was like, right? How about this? Let me ask you this. How many people took up my challenge where they compared last meeting versus this meeting? Anybody? On says 2022 GDP will be lower than this one relative to the last one. But if you look at what I project 2022 GDP to be, it'll be average. If you look at let's say 2012, 2013, 2014, 2015, 2016, 2017, 2018, 2019, 2022 will be right on that trend. Yeah, they only changed 2 sentences, right? So they certainly didn't change policy. All right, so then my fundamental bias wouldn't change. So anyways, let's go through this. We're having, yeah, I'll just randomly go through these things. Okay, so here we are. This is my sell. Down, 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 up, up, down, 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 up, up, down, 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 down. Oh, no, no, no. Double top, lower low, lower high, lower low, lower high, lower low. Uh-oh. Yeah. Cool. Cool. That was a good day. So now what you're planning here is this, correct? Or way back up here. So Pete, you have to understand, Pete, I made my decision April 19th, 2020. I made my decision April 19th. And so, like, why? Yeah, yesterday? Yesterday? No. I mean, right? No. No, it changed nothing. It's already part of the plan. It's already in the history books in my mind. Everything's a foregone conclusion because I've already done my analysis and I've already created my trade plans. I've already created my biases. This is all done. It's all done, right? Oh, I'll do, yeah, Gorky. I'll do some. I'll do some bidding. Okay. So, anyways, there we go. Yeah, peso. Gee whiz, I've just been so unlucky with this one. I'm gonna have to wait. Just haven't been able to catch it. I tried to catch it here. I know. Why not here, here, here? Well, I don't know. So that one I've been unlucky with. Let's get off exotics. Let's take a look at I guess dollar pairs, right? Okay. All right. So this is great because I'm setting things up for later in the week, later in the day and later for next week. So some nice pullbacks are very cool. Okay. Could be some good opportunities in here. We had this highlighted somewhere. So that concerns me that we couldn't breach 40. So I'm going to trap it like it's range bound. Okay. The sucker's all over the place. Okay. So right now this is holding. This is next week's entry. So hopefully right? It's like the pound. Typically you would want to trade it like this was a higher high, higher low. But right now, we're just kind of stuck in this range. Right? Okay. So I know I want up, right? But here's what I expect, right? Remember, I said many market participants don't really understand what's going on. They have very similar questions, and they're making, I guess, the best decisions that they can, even though they may not be the right decisions. So right now, they're trying to figure out what to do. Okay, they're just trying to figure out what to do. So pound and euro are trapped. We'll take a look at kitty cat. We hit my target. Did you notice that? The target I set for you guys 4, 5, 6 weeks ago. Right? 123 was our target. My entry is way up here at 126.5. Isn't that neat? So we came down there and we hit the target. Isn't that cool? Cool, right? I'll remove some of this. Maybe it's easier. Okay. All right, so here's the top of the month, if you recall that. And that puts us into this pivot profit zone, and that's where we are now. I have this drawn here to here. What do you mean teaching about pound? What do you need to know about pound? Yeah, me too, Johnny. The interesting thing about it is if you're expecting yen strength, you have to let the market show you the yen strength first before you throw it down. Okay. Oh, by the way, my monitors are not on today because we're expecting a tornado. Schools are closed and everything, so I'm ready to go. And I don't want my computers to fry out because of electrical storm or something. Uche, are we still risk? I've never been risk off since April 19th, 2020. Uche, I've been risk on. Also, when we talked about selling the dollar, from the middle of February, I started telling you that from the middle of February to the middle of March, you should be preparing and setting up and trading like you're risk on. And by the time you hit April 15th, you should already be fully risk on. Okay. Okay. I sense that people are uneasy because yesterday was a big day. Okay. And you should not be uneasy. Okay. I talked about it every day for weeks and weeks and weeks. March 17th, March 7th. So as far as I'm concerned, you should be executing plans. You shouldn't. The questions have been asked and addressed, and you've created your strategies. You have your biasy. You've even started some of the execution, but like there should be very little questions left, because over the last 4 weeks of preparation, you've already asked your questions. You've already analyzed. You've gone through your thought process, you've made your determinations, and now you're just simply trading. But to be wondering what's going on after the Fed meetings happened is you're way behind. You're weeks, maybe even a year behind. So, yeah. So this should be right. So, for example, you've already determined whether you're going to take profit today, or you would have already taken profit, and whether you're going to try to add to this or let it run, or you're thinking next week, you're thinking rest of the month, you're thinking S2, you're thinking sell at 125. But like there shouldn't be, question marks floating around your head, right? Okay. If that's the case, and I don't mean to, I'm not trying to belittle you. What I'm trying to tell you is your job is to have done all that work before it happened. Okay. Do you guys remember, maybe it was the swing trading group last week, we were talking about how professional athletes visualize. No, Hope, people were asking the wrong questions is the issue. I was watching an Elon Musk interview from like 3 years ago, and they were talking about like SpaceX and his rockets and stuff, and cars and, batteries and solar cells on people's roofs. And I can see his point of view where people just don't understand, and they get excited about childish stuff like rockets. Oh, rockets. Oh, rockets. And you could see it in his eyes, like it's so I think Powell's sitting there like you don't understand, and it's hard for him to address these things because people are asking the wrong questions. GDP at 6%. Yeah, well, last year it was negative. I mean, it's sixth grade math, and yet billion-dollar traders are asking the wrong questions. And so for them, it's a little like they just want to get through this year and get to next year. That's why they don't want to do anything this year, because if they can get to next year and the math normalizes, then people will stop asking stupid questions. And it must be frustrating because they feel like they feel like people want them to do something, but it's obviously the wrong thing. So I think it's just a great frustration. And then the media churns it even more and gets everyone excited about, again, the wrong things. Right? I think the Fed would just like to stop doing press conferences after every meeting and get rid of some of the transparency, because there's too much pressure to do something when nothing needs to be done. Well, yeah, Saeed, but I suppose that changes the tone of the question, right? But I'm telling you, they've said, oh my God, maybe dozens of times, they are not going to raise interest rates until 2023. Why do we have to talk about it more? Why does there need to be more uncertainty? Why does there have to be, oh my God, well, what about a change in the dot plot? Oh my God. Dude, they've already told us dozens and dozens of times. Well, is it the March meeting or is it the September meeting? Who cares? Dude, not this year, not next year. Go about your business and invest your money. So it's just funny. And I'm not talking sarcastically to you. I'm talking sarcastically to the general market, right? Like, people are freaking out, but they've already answered the question 9 times, 10 times, 12 times, and people still want to know. Well, yes, we understand you're not going to raise interest rates till 2023, but are you going to raise interest rates next year? Right? And that's kind of the thing, Hope. In my opinion, that's what's going on. They're like, dude, I already answered that question. We're not going to even think about it in 2022. We're think about it in 2023. Yeah. But are you going to raise in 2022? Right? And you could just see them melting like, dude. Okay. Supposing they suddenly changed their stand. Why would they do that, Uche? Their whole idea, the whole premise of modern central banking policy is transparency. And they've also told us they're not going to change unless they have the data to change. And they've told us they're not going to change because of forward guidance. Thank you guys for subscribing. They're not using forward guidance, which, again, well, what does that mean? Well, what's the opposite of forward guidance? Hindsight guidance. So after interest rates, after inflation gets to 3%, maybe they'll raise interest rates, but not before. See, in the past, they were worried about inflation, and they kept jacking up interest rates, and they never got inflation. They were at full employment, but they didn't see wage growth. This time, they understand it's fake inflation, fake growth. They're going to let the math take care of itself in 2022, and by 2023, if under those circumstances with good numbers now, we do have 2.5% inflation rate, GDP at 3%, then they'll start to normalize interest rates. But not until after it's happened. And Janet Yellen has said this too. Janet Yellen said, look, we got tons of tools to deal with inflation. So if we have high inflation for 3 or 4 years, it ain't going to hurt everyone, because people with money, people in the market, they're right. People with credit that can borrow money will make money. So for a while, everyone will be rich, and the market will overshoot. Great, but then we'll normalize interest rates. We'll do some things at the Treasury or at the Fed, and we'll cool off the market a little bit. We'll bring it back to potential GDP, and then we'll let her grow. So, but people, they don't understand. They just don't get it. And that's the look on Powell's face, I think, where he's told us everything. And then people are scratching their head. They're like, yeah, I understand that, but are you going to raise interest rates in 2022? And you get dizzy. You're like, oh my God, I think that was one shot of tequila too many. That was one dumb question too many. Right? So, yeah. So now here's the point. It's your job to look at this information, read the reports, watch the press conference, understand the macroeconomics, the monetary policy, the microeconomics, the market sentiment, and be able to take all this in and make informed decisions, right? Informed investment decisions for you or for your clients, and be able to sit down with your clients and explain what's actually going on. But freaking out is never the right thing. Thank you, Hope. I use them all, Uche, but they're basically the same. But so, anyways, we could look at Aussie dollar. Okay, bringing it back home. Okay, so remember we had talked about this, I guess 24 hours ago, where the market's going to misinterpret the information, and then they're going to misinterpret the information again. I said bulls and bears will have their moment in time. They'll freak out both ways, and then we'll go on to trading fundamentally. And now you'll see things like this, like if you bought late, you're probably being punished now, right? And you're like, oh man. Do you remember me doing this inverse head and shoulders for you? Do you remember talking at the very beginning of March? I said, by the Fed meeting, right? Between now and the Fed meeting, you should be setting up your trades. How many people remember these conversations back in here? Okay. And in the swing trading group, we were talking about fighting two forces, one being your long-term vision and the other being short-term market conditions. And the job was to maintain your long-term growth outlook or long-term trend outlook and trade on smaller. So you might see your monthly, but you might be trading weeklies and dailies inside your monthly. And they might not line up perfectly, but you definitely know this is going to happen. Definitely. Okay? That's fine, Sky Killer. If that's your strategy, then carry it out. I explained it to you and then gave you homework. There you go, Sangam. Okay? So imagine now people are just getting in the game because they're like, oh my God, the Fed, and they're watching TV and they're reading the news like, oh my God, and they buy and now they're losing money. Okay. 1,600 pips. When was that? Yesterday? Cool. Yeah. Well, you shouldn't take profit because of your record. The market doesn't give a damn about your record, right? It doesn't even see you. It doesn't even recognize you. But hopefully you have a plan. Okay. So right now, you've already decided whether you're buying these dips. Okay. Noki? No, I was on CAD. So, yeah, catching the dip, right? Did the Bank of England was earlier, wasn't it? You are the one. So I pulled this website up for you Monday, wasn't it? No, I don't think it was one pair, Moreno. I think it was open portfolio. Okay. So current inflation is 7%. Target is 2. Obviously, they're not raising interest rates. Okay. Okay. You definitely got to read that. That was released yesterday. And you got to read this. Okay. I'll do it later. Okay. You're right in your kill zone. That's right. Isn't that cool, Sangam? Down, 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 up, down, 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 up, down, down. Sorry. Down, 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 up, down, 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 up, down, 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 up, down, down, up, down, down, up, down, down, up. Maybe, maybe. I don't know. What's your opinion? What would you advise someone? Where, what, where do you think the pound dollar will be by June 16? Will it be higher or lower or the same? Please place your vote. H, L, or S. Where will the pound dollar be higher? Will the pound dollar be lower? Or will the pound dollar be generally the same on June 16th compared to right now? Okay. Well, then what's the big deal, right? You know how to trade this. You know price action, right? You've already made your decisions. So trading should be straightforward, right? Cool. Okay. Cool. So no big deal, right? How about Aussie dollar? Higher, lower? Yeah. So it should be fairly straightforward, right, John? So you buy dips at support. As long as, right? And by the way, a dip is a higher low. A drop is a lower low. So now you every day you're like, is this a higher low? Should I buy at next period's M2? Should I buy at today's central pivot point? Should I buy a roll reversal? Like, it shouldn't be difficult. Right? If you already have this planned out, like there's no difficulty to it, is there? Okay. Yeah, but this isn't a weekly play, Stephen, in my opinion, anyways. Okay. So, like, let's change the point of view based on that. All right. Thank you, Stephen. Let's go to position trading bullish. Okay. So I bought it down here. Cool. What's the target? We'll call this as a we'll call this, so I'm there, but we'll call this the reason, right? Because I had to have the higher high, higher low. So let's just call this a double bottom on M2. What is the target based on that knowledge? M2. What's the target? Monthly M2. Okay. All right. But do you guys believe that this is technically important? You have to believe, like, oh my God, a double bottom on the monthly M2, not a random chance. And by the way, you see how it dipped just below? Do you know why? Because people that were short had to cover the spread to be taken out of their position. So it had to go a little bit lower to be taken out for profit. So if their stop was exactly monthly M2, they had to go the distance of the spread low to be taken out, which tells me anyone that was short days and weeks in advance had this as a target pre-planned. Pre-planned. So anyways, they are going from M2 to M4. That is the plan. That's the bullish plan. Now, will bears get involved again? Maybe. Okay, so that number is here. We are going for 81, let's say. .81. 0.00000000. Okay, cool. I'm long at 0.7650. 0.000000. Okay, how many pips? Okay, not quite 500 pips, but that's what we're doing. But that's only for this month. If I'm in it for 3 months, it could be significantly higher. Come on. Boo 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 boo. Boo 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 do do do. Oh, why won't I grab it? There we go. Oh, you scumbag. Okay. How about 90? How do you feel about 90 by June? Crypto, we don't count fractional pips. So when I say 10,000 pips to get into my portfolio management group, I don't mean fractional pips. Okay. Okay, we're not talking fractional pips, fractional lots. So guys, what's 1,000 pips? Okay, 1,000 pips is you buy it at 80, you buy Aussie dollar at 0.08 and you take profit at 0.09. That's 1,000 pips. Okay. Which is to say, if you buy one mini lot, it will require approximately $100 margin, and you'll make $1,000 profit, which means you have a 10x return. So if you make 1,000 pips and you only double your money, it wasn't 1,000 pips. It was 100 pips, son. You went from 180 to 181, and that is barely a trade to be smiling about. That's a day trade. Okay. Yeah. So now 10,000 pips, how do you do that? Because most currency pairs don't move 1,000 pips in a month. Yeah, well, you have 10 or 12 trades open for long periods of time. Every trade is at break even. You can't lose money. And you're in these trades for longer periods of time because you've done analysis and your trades are actually worth more. And you've entered the trades in such a way that you didn't take on more risk, yet your trades are worth more. We want low risk and high return. And you can't do that randomly, and you can't do that by chance. You have to have a strategy, and you have to have the tactics to carry it out. Right? Cool. So is that going to happen? I don't know. I don't know. I don't know what's going to happen. Okay, the rest is technical analysis, guys. Pretty simple. It's probably the first thing that you study, technical analysis. So after years of doing technical analysis, you're probably pretty good at it. And it's the easiest part of your trading. Right? Like for example, if you're a bull and you don't know if you should be buying or selling right now, then you don't understand technical analysis, and you should go back and do that. Okay. If you understand technical analysis and then you look at this and you're like, well, I don't know if I should be a bull or a bear. Well, then you need to work on things like fundamentals, monetary policy, seasonality, and you have to do those things. But your technical analysis is good. But in a situation like this, your technical analysis is probably inconclusive. You're probably thinking range bound. Yeah. Okay. Okay. And then once it breaks out, you'll say, oh, it broke out. Oh, but now we're running into a double top. I'm not sure what to do. Once again, you don't have the strength and conviction of, forward your own forward guidance, right? Ahmed. So, okay. Cool. Cool, cool, cool. Coolio, coolio, coolio. La 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 la. I guess we'll look at some yens. Okay. Okay. This is what happens if you believe this is a rotation from top, lower low, lower high, lower low. This is a bearish point of view. Luckily, it's gone bullish. So what you should probably do is measure the new move. Okay. 50% to 1382. So the next high is like this 131 area. Okay. Boom. Aussie yen, Aussie. Okay. Nice. Okay. That's next period central pivot. Using the monthly as a roll reversal. This one is actually one of the weaker ones, so you should be careful at double tops. But right here is the roll reversal and buy zone. There's a secondary one here that might come in play at 78. We'll go to Beast. I was explaining, look, this is a buy, this is a buy, and this is a buy. And we were talking about this last week, like some people are making decisions over there. I'm like, why? Why are you so late? Okay. So the question is, like many of these other trades, are you already doing the front run? Oops. Okay. You'll see if this turns bullish, it'll pull the buy zone up for next week. And then our friend, the kitty cat. Okay. What do you stink? Up, down, up, down, up, down, up, 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 up. This is your question. Do you have that planned out? Or are you going to do more of like that? At what point will you go from bullish to not bullish? At what point will you go from not bullish to bearish? Do you have a point? What is your point? What is your raison d'etre? Okay, this is daily. Okay, so right here's the first of the month. Okay, these are daily. So many of you get lost in this period where you're like, man, nothing's happening. This is January. And then, boom, just takes off to February. Okay. And then March. Okay. I'll tell you, though, will this likely continue up and up and up and up and up and up? No, everything has its ebb and flow. But there's no evidence of a change right now. I think we already did exotics, so let's do commodities. My oh my, WTI. Cool. So we're kicking off the central. The target is 71 on oil. Obviously 70 is a psych level, so we'll drop that like it's hot. Drop it like it's hot. Drop it like it's hot. Okay. And so we're farting around there. If you're looking for roll reversals, we got one there. This is next week's, so if support holds, then it's going to then we're only getting back to the top. So we'll have to see what happens today on oil. There's two places, right? This 63 level, and the next one is like 61, but 61 is a little too low. So I think a lot of people want to keep this above 62.5, right? And kind of like this for this week and next week. Okay. By the way, I'm going to move the price on FX Bootcamp to $4.99. I know it used to be like 1,600, but right now it's at $386. I'm going to move it to $4.99. Just get rid of the coupon code. Just move it to $4.99, and then I'll probably raise it again by summer. So if you're thinking about FX Bootcamp, it's been on sale now for a year because of COVID. And I guess since 100 million or 10, right, 100 million Americans have received a shot, I think that's good enough. So yeah, it's 1382. So anyway, so I'm going to raise the price and then probably raise the price again and probably raise the price again. So you've had a year to benefit. It was a good year, by the way. I really enjoyed it. The way we started was I dropped the price to FX Bootcamp by 76% so that people could, you remember, people were freaking out. It was the end of the world. Everything was shutting down. Airplanes were banned from flying. People were losing their jobs. The markets were crashing. So my response was I cut prices by 76%. And then instead of doing just a meeting once a week, I did a meeting every single day for about 4 or 5 months. And I kept people calm, I kept people focused, and I did my part. Once that was over, I just never raised the price. So I think now that another 6 months has gone by, if you're not going to join, you're never going to join, so it doesn't matter, right? So I'm going to raise prices again, get back to maybe normal. It was a really fun period. I'm really glad we were together day after day after day after day. And we nailed the bottom of the market. Yeah, I think that was pretty cool. Cool. So Natty made it through its target area, which makes it dangerous. Biddy, okay. So you had what? The opportunity was yesterday, and we should be on our way to 70,000. See, 382. So far, it held yesterday. It came down, touched. Look at this, guys. I have to go on to like a hourly chart, let's say. And let's back this out. Okay. It came down, touched my 382. Not this one, the next one. It came down, hit my 382, and gone. So based on that, there's a potential for this to be on its way to 70,000. When would the price go up? I don't know, maybe today. So like on Bitcoin, you might want to wait to get to a buy zone, either this week's buy zone or next week's buy zone. Find your prices, find your lines. So you got a roll reversal there. You got a roll reversal there. Here, reversal there, reversal everywhere, right? And then you take this up now. So on the next turn, on the next move, maybe you wait for a 5-8 cross up on an hour or 15, and you have the strength to carry it through the top and to the next level. Okay. Oh, yeah, I didn't do gold? Yeah, I'll do that. Right on, crypto miner. Awesome. Super. Gold. Okay, gold. I'm just waiting. Okay. A lot of central banks, I guess, still dumping their positions from earlier. Okay, cool. This doesn't look bullish to me. So I can't really do much. I'd like the dollar to weaken, and it has, but gold's weakened further. But you have to understand what made it go up in the first place. That's central banks buying, and now those central banks are unwinding. So that's cool. That's cool. I would expect gold to go back up. I think some gold traders have gotten out of gold and into Bitcoin, and they're sort of your prepper traders, right? The ones I never really understood why they were buying gold. They're buying gold for, let's say, their own personal reasons and fears. Those people have rotated into Bitcoin, which is cool. So I'm just waiting, like, when it turns bullish, I think I will go bullish too. Not necessarily just gold. It's not that I'm bullish on gold. It's that I'm bearish on dollar, and I'll rotate some currency into that asset. Okay. Okay. Boo 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 boo. Okay. So you can ask yourself here, what happens in periods of stress? This is when we learned COVID was hitting the market globally. This is when it became a Chinese problem and instead a global problem. So what have you learned about gold priced in dollar? I don't know if this is true in euro, but what have you learned, not from my opinion, not from a book you read, not by some idiot on TV? What happened when COVID hit the globe? Yeah, me too, Jim. I've used Coinbase for years. In fact, I did a Coinbase transaction 2 days ago, I guess. Okay. No, guys. No, not not esoteric answers. What happens to the price of gold when there's a global macro exogenous shock? Tell me, what do you see here? I'm giving you a hint by highlighting it in bright colors. So the person who said up, well, it looks like down. Okay. Now, remember, I said around April, I declared dollar weakness. The end of this down move. Okay, that was here. About 3 weeks prior to that, which is here, I was telling people in my group, remember, I was doing webinars every day for the group during the crisis. I said, create a list of stock, 10 stocks that you've always wanted to buy, but could never afford it. I don't know if it's Google or Apple or Amazon. It doesn't matter. If you like Starbucks and Starbucks dropped by 30%, you probably need to buy it. Anything you think will be around 25 years from now, you should just buy it. You cannot save your way into prosperity, is what I told you. And then about 2 or 3 weeks after that, I made a declaration. The bottom has been achieved, and I am a bear on the US dollar for 5 years. Okay? So now you could say, when there's a global crisis, what's going to happen to gold price and dollar? Now you'll know. Now you know. Okay, this is the crash. This is when we realized this was a big global deal. Okay? What happened there? The Fed told us to sell the US dollar. Just that simple. Now, if you don't understand it, so like literally right in here, he said they're going to overshoot, and I was done. Done. I explained what it was, translating very complex economic models into an understandable description, turn that into a bias, and I was done. Okay? Okay. This has a lot to do, this move here in gold has a lot to do with central banks devaluing their currency to address this. Because like money flowing back to the United States, money was flowing back to India, money was flowing back to Israel, money was flowing back to Brazil, money was flowing back to wherever it came from, guys. Remember, all that risk money was invested somewhere. And there are economies, like India, for example, that just cannot survive an economic shutdown and a strong rupee. It's a double hazard. So what did they do? They bought gold at a time when the dollar was weakening anyways. Okay? Yeah, Sky Killer, Portugal's got, it's got problems. It's not in the same century. And I'd love to visit Portugal. I love the history. Europe is a very confusing place to me. I don't live there. I like to visit it when the currency is cheap. But their response to like the Greek crisis, for example, and then their response to 2008 financial crisis is just strange. Right? Their economic policies were quite strange. For example, people lost their job, spending stopped, and people didn't have any money, so the government raised taxes and cut spending. You're like, wait, I don't have any money, I lost my job, I can't afford to eat. I need your help now, government. I need you to help me. And the government said, oh, well, we used to have a program in place to help people in your situation, but we're trying to save money because of the financial crisis, so we got rid of that. So, yeah, when you had a job, we were helping other people, but now that everyone's lost their job, nobody gets anything. Oh, and by the way, you owe us money. And you're like, what? Yeah, we're raising taxes. So we're going to tax the crap out of you, even worse than we have been. So your 40% taxes are now 50% taxes. And by the way, we don't have a program to help you now that you're out of a job. And you're like, well, what the hell? Okay. And it was really strange for years. It was very, very strange. So then, how does such a beautiful country like Portugal now, going back to even before all of this, yeah, it's a small country. I get that. But it shouldn't be in such an economic and social crisis. So many of the working force in Portugal have moved to places like the UK. And so now you have skilled Portuguese workers in the UK. They brought their wife, they brought their kids. There's nobody in school, at least this is how I read it, so I don't know if it's true, but they're turning elementary schools into old folks' homes. Well, an economy is not going to survive like that. And in the modern world, why? Like, we know how to solve these problems now. Like, it's not confusing. We know what works and what doesn't work. Now, you might make slight different changes on how you'd like you run your society, and there'll be positive and negative consequences to all those choices. So I'm not saying one is purely good and then one is purely bad, but like, you can fix Portugal and put it into the global market and export more than wine and cork. Right? Like, right? Like, it's in Europe. Like, for crying out loud. It should be a wonderful economy. You don't have to turn it into, a giant factory pumping out pollution and having all the population enslaved to making widgets and gadgets for the New World Order. But people don't have to be desperate either. Right? So anyways. And what a wonderful history Portugal has, huh? It was, if you study it, a town around the time of the Genoese and the Venetians, they started pushing east to follow the silk, to do like the Silk Route, but by boat. And so they started creating fabulous ships, and because the boats were going farther and farther and longer, things like insurance was created in Genoa so that you can insure the ship and it could go out east and come back with spices and other riches, right, from trade. So global trade was just starting. And so the Venetians were going that way, and the Genoese were going that way. Let's just call them Italians. So the Italians were going out east and trading out there. And the Portuguese went that way too, because that's where the money was had, like the Silk Road, but by water, so much easier than crossing mountains, right? And so you get they started going out there, and there was so much competition to get to, like, China and stuff, that there was no room for Portugal. So they went way out to India and they get to Goa. And so, they tried Macau, but, things, they were being out hustled by the Genoese and the Venetians. So they're like, okay, well, forget it. Forget Macau. Let's go farther. And they run into India and like, hey, we're here. We're Portuguese, right? And so there are parts of India that still speak Portuguese, which is pretty cool. but that didn't work out too well because there was just, I don't know, it was too far away and there was still some competition going on. So they're like, wow, we need a new plan. And they said, you know what, let's go the other way. Let's don't go east, let's go west. So they sailed out and they hit Brazil. Okay. Meanwhile, the Spanish are like, hey, we're getting crushed by the Genoese and the Venetians, right? So the Spaniards were like, well, we need to go west too. So the Portuguese said, well, we're going to go southwest, and the Spanish went west. Of course, using Italians in the beginning, right? So anyway, so you get like Christopher Columbus. He lands in like El Salvador or something, right? And the Portuguese go farther south, and of course, eventually the Spaniards work their way south and conquer everything, and the Portuguese just kept their little piece of the pie. Spain's a much bigger, more powerful country, and so that's how all these things worked out. And the technology that was developed to do all this, like in shipbuilding and all that kind of stuff, it's amazing to me that the Dutch didn't get in on this action beyond buying the island of Manhattan. The Dutch were pumping out ships, one a day. It was amazing technology. But then they got caught between Spain and Portugal and England and France, and then they had all this war, and everyone betrayed the Dutch. And the Dutch were by far superior in technology, but got betrayed by everybody, and the Dutch are still a small little country. Powerful and rich, but it's amazing that the Dutch didn't take over the world. Napoleon invaded everything. Our king escaped to Rio de Janeiro. Yeah, sure. Oh, I didn't know Rio was. No. Are you sure it was Rio, though? Not, what was it, Bahia? Columbus hit Jamaica first. Yeah, he did, right? No, no, no. Did he hit it first? I know he hit Central America. It was like El Salvador. But, yeah, but he was in the Caribbean first, right? Sky Killer says, yeah, in Brazil. Yeah, but I don't think it was Rio. I think it was Bahia. Oh, no, it was Rio? Oh, okay. Okay, my bad. Yeah, so, yeah, the Dutch didn't have enough people to colonize. Yeah, and that was also the other issue, right? So, but yeah, Cristoforo Colombo. Of course, it's weird. Like, was he ever called Christopher Columbus? Like, in his whole life, probably nobody called him Christopher Columbus. In his entire life, nobody knew him as Christopher Columbus. And then you ask children, like, right, 1492, sailed the ocean blue, right? And who was that? Who discovered America? Christopher Columbus. You're like, what? Like, when did that happen? His name wasn't Christopher Columbus. Cristoforo Colombo. All right. Cristobal Colombo. Is it Cristobal Colombo? Yeah. Anyways, interesting. I love history, in particular to strategy and stuff. Well, it's interesting. So even I have it. Well, so Cristobal Colon. So again, it's being translated into a local language. So that would be, I think, the Spanish version of an Italian name. Colon. So I don't know Colon. But I believe the Italian, because he was Italian working for the Spanish, right? What was her name? Queen Isabel? Um, okay, Queen Isabel was Spanish, but Christopher Columbus was Italian. And he had gone bankrupt a few times in Italy and couldn't get any funding there to back his wild and crazy dream of going west. And the Spanish were getting their ass kicked going east against the Italians. So they got an Italian with a death wish in Italy to say, okay, we're going one way or we're going to die. So they give him a bunch of money and off he went, flying the Spanish flag, but he was Italian. Right? So I'm pretty sure. Yeah, Femobic says Italian is Cristoforo Colombo, but that's what I was saying, right? But it's interesting. So now, because I never knew the other one, Cristobal Colon, but again, that would be a Spanish translation of it, which is interesting, which is like the English translation is Christopher Columbus. So it's interesting. So if you brought up speaking Spanish, they might have said Cristobal Colon, which is interesting. I've never heard it. I didn't grow up speaking Spanish, right? So that's cool. But he was Italian, so he would have an Italian name. Russell, we don't know for sure where he was born. Sure, could be Portuguese, dude. Sure, we know, dude. You'd be surprised how good the records are. So anyways, so right now we're in some risk off mode, countering what we did yesterday. We expected that to be true. So now we need to carry out and execute the trade. So imagine you're an educated young officer leading a small team. You know what the strategies are. You know what your missions are. You know how to use your weapon. You know how to lead your men or men and women. You know how to create tactical responses to conditions. You can act and respond accordingly, but you know what you're trying to do. You know what the objective is, and now you do it or you die. You achieve the mission and get one step closer to winning the war, or you do something stupid, get yourself killed, and it's over. So, good luck. Thank you for being on my team. I appreciate you. Thank you for all the positive energy. Thanks for hanging. The last end there, we were just talking history. Very cool. So anyways, peace on earth. May the pips be with you. May our profits be above average. And if there isn't a tornado later, I'll see you in my swing trading group at 2 p.m.